Welcome to TradeTheMBI.com. This is John. This reports for the 24th, wearing my Toward the Front shirt. Of course, you know it started here in Florence because the Olympics are going to be in Paris, so they had to deviate from the normal schedule. It was a great, fantastic race if you watch it. Today, Pogacar won convincingly after 6 stages victories, but not so much success happening from the market standpoint, at least from a bull standpoint, but from a short standpoint, definitely has been strong. We've seen that ever since that break of the 56.49 ABM yellow here. Weakness has grown, and part of that uncertainty, Biden withdrawing, and then you had the brief excitement, of course, shock polls, and this is something that I think the Fed has learned from politics. You create the poll that says Harris is tied with Trump. You just oversampled Democrats by 30%, and she still finished 2 points below even after doing that. But nobody cares about the details of what made up the thing. They just like the headlines, and this is exactly what the Fed likes to do. Unfortunately, some of the earnings are probably going to start coming out a lot weaker for a lot of companies, and that's going to have an impact because you can't sell that any other way. I mean, this is at least the one truth factor that you get when it comes to actual news. You can't fudge that. You can make up all sorts of things about what the Fed's going to do, this, that, and the other, and that'll have an impact. But actual numbers, because you can't hide the effects of inflation. Yeah, you had the early quarters we talked about would be positive because you didn't have to replace inventories and that. But once you had to start doing that with inflated costs, everything flips around and becomes much harder. So all we've done is move right back to where we broke out originally from the positive extreme. And even when we go to later and look at the 50K chart, you see the same thing. Nasdaq had been weaker, and so it's interesting. You've got the S&P, which is right at that positive extreme line level, and then you have the Nasdaq, which is below it. So the Nasdaq continuing to struggle through that, and short-term buyers have just been enough to kind of hold things relatively modest. But a further break towards the 50% here is going to be a tough one to hold. You had no clearance here from a DOC reading that midterm buyers or even long-term buyers could lift that up, and so I think that a move down towards that 50% is problematic as far as being able to be held up. When we look at it from a treasury standpoint, again, just utter confusion, no idea where things are going to go from here, and so they're just lost in a mix. Of course, some people are fleeing to the safety, but it's safety and a negative yield. But you can't keep going into the market when it gets to an exacerbated state. You're kind of stuck. So that leaves commodities. Well, oil's been in a respite here. No positive exchange for it to fill back, and some of this is part of what you might have to consider is significant economic slowing globally. And or the increase in supply, but that's less the case than more about economic conditions. The euro, of course, there was a joke all along that it made the giant push, but this positive extreme is going to get filled, and probably should continue to go further from there. But this is the same thing we see in the bond market. They just make these exacerbated moves that have no credibility, and they get filled back in. Of course, like we said, gold is going to make its resurgence. It's not going to stop. This is one of those where buying the dip isn't going to be expensive in any way, shape, or form because it's going to continue to propel. It's also going to have a positive impact for crypto, but that's going to be a bit more volatile relative to what you might expect from gold in that, but nonetheless, still going to be a bigger mover to the upside over time. Same thing with ETH, it's just kind of in a pause. And again, there's this lot of still confusion within the election construct and how that works. And we'll talk about that you just anointed someone. It's like Biden's cognitive capabilities didn't change from the time of the primaries until now. Just everyone finally agreed that they could see that the emperor had no clothes, and you just anoint somebody. It's really strange. If you're a Democrat, I don't even understand how you can find that acceptable. You have no chance to even vote for your selection. Anyway, from an intraday standpoint, we had that spike at the end of the day of the MBI white. Well, that called for at least a move to the 50%, if not all the way to the zero. And we ended up with a brief push back up magenta, but once it broke below, which happened a little bit later in the session, all the way up here, just below the highs, right around that 56 range, 56.20 range, and proceeded to trade lower from there, and hasn't changed. And even when futures reopened after earnings, Tesla and that just continued to plummet. And even in the European session, there's just no excitement whatsoever. Because again, too, you got a problem because if you buy the headlines, then you've got a difficult situation. Which trade do you put on? You put on the Trump economic trade versus the Harris trade, if you even know what that is. And so that becomes problematic. So we're seeing a significant sell-off here in pre-market. It's likely to not even hold this 23% range, but of course, leading up into the open, you could see some bonus from it. But overall, things are still a bit more to the dark side than bullish. So just got to keep that one in mind. And it's not likely that supports will hold when they're hit because of what we're seeing from the indications from the readings. So from the open that we had, the market faded a little bit, then rallied back up, made new highs, which was just a false push there. And then the breakdown started again. And then once that happened, MBI White started leading most of the treks. And even when they got the bullish run, could get past the 23%, which just implies that you're going to see more negative. You got to the 50 right before the end of the day, and then it just got hammered down a little bit. Nothing dramatic, seeing anything super duper. And then you can see from the open, boom, straight down, and that's actually accelerated a bit here. So that's the long and the short of it. It's pretty straightforward. Not surprised by any of it. I think that you're going to continue to see some of these wildly vibrant narratives play out. And again, that's just going to cause confusion. Confusion usually leads to lower markets simply because when people don't know what to do, they don't buy. They just wait. Aggressive ones will short it, and that plays the game. Still, once things settle out a bit, and perhaps after the Democrats have their convention, then you have a clearer idea of where things are at, and I think that will start to develop the trade, and it'll start to be a bit more positive as we get towards September, and that the market will have clear ideas as to where they want to go. Either way, we're going to see it all in advance because we can see where it's happening with the money and that, and just keep following it. As always, though, trade well. Anything relevant, I'll put on the Skype chat. Have a good one.